VP of Options at Simpler Trading, and today we are going to be going over Fibonacci retracements and extensions. Now, I love Fibonacci retracements and extensions because I use these every single day in my trading because I am a technical analyst, and specifically, I like to be able to pinpoint targets in the market that are specific price points so that I can use options to really maximize my profit potential. So specifically in the options market, I really like to use credit spreads, debit spreads, and of course, butterflies. I have been called the butterfly queen more than a few times, and I absolutely need Fibonacci to create the butterflies that I do. So what I'm going to be doing today is I'm going to be going through a tutorial where I'm going to demonstrate in ThinkorSwim, which is the platform that I use, how I create Fibonacci retracements and extensions. And then I'm going to also demonstrate, how I use that in my trading. So let's go ahead and get started. Now I'm going to start off with this Google chart, and I'm going to show you where you get to this tool. So first of all, what you're going to do is you're going to come right down here in the corner, and you're going to click on whatever symbol is right here. Now, on my charts, I have my Fibonacci tool ready and waiting because it's the #1 tool that I use. But if you don't see that tool there, what you're going to have to do is click on this level, and you're going to look at this menu and pick out your tool. So this is going to be called Fibonacci Retracement Tool. And you're going to click right here. And then what it's going to do is it's going to place it down in this box for you. So on my chart, you can see that I already have a level drawn. So I'm just going to go ahead and erase that. So what I'm going to do is right click and click on clear drawing set. And this is going to just ask me, hey, are you sure that's what you want to do? Yes, I'm sure that's what I want to do. And I'm going to go ahead and erase it. Now, one question that I get with Fibonacci analysis all the time is, what time frame chart should you use? Should I draw my levels on a monthly chart, on a weekly chart, on a daily chart? How about if you're a day trader? What about a 15-minute chart? Now, the answer to this question is that you can draw them on any time frame that you so choose. It just depends what time frame you're trading. So, for example, I'm going to start off with Google on the monthly chart because this is going to give you the big picture view. And when I say monthly chart, I mean, the view into the next 1, 2, 3 years. Okay. So it's not, calling a price target that's going to occur tomorrow. Now, as I go down in the time frames into smaller time frames, those are going to give me price targets that are coming up in the near future. Okay. So let's just go ahead and start here. Now, first, I'm going to click again on my tool and then go ahead and click on the one that I want. Now, what you're doing when you're drawing a Fibonacci retracement or extension target is you're looking at a trending stock and you're saying, hey, you know what? This stock is in a nice trend. It could be an uptrend. It could be a downtrend. And what you're doing is you're projecting based off of the moves that it's had in the past, where it could end up in the future. All right. And so when you're drawing the level, you are working on identifying the retracement zones, which are going to be the resistance zones. Those are what I like to call the easy target zones because, well, it's a lot easier to target resistance than it is a full extension swing. Now, once you get through resistance, you're looking for the full target, which would be if you see a continuation of a trend, you break through resistance, and then you keep going. So what we do when we're looking for price targets is we're going to measure it based off of the previous swing. So in this example, you can see that you have this very lovely Google trend, and then you can see that it pulls back and you see it's hooking up, and very nice, bullish trend, right? So if you're looking at this chart and you're saying, well, where could this go? The answer to that is we're going to draw a level that is starting at the previous high, which is right here, and we're going to grab the low that comes after that high, which is going to be right here. And all you're going to do is you're just going to click on your high and you are going to click on your low. And what this tool is going to do is it's going to project for you some potential zones that you can look for, okay? Now, you might be looking at this and saying, man, that looks really easy. Well, I also am, selecting a chart that has a nice, easy trend. And by using a monthly chart, it's also giving me a pretty clear pattern. I'm going to show you some other examples on lower time frames. And then, of course, this is not the only part of your analysis, right? You're putting this together with some underlying, macro factors. I love trading earnings and I love looking at the fundamentals as well. And then we're also going to combine it with the squeeze and some volume and some other things like that when we're doing our, full trading setup. But today, this video is just about Fibonacci. So now, when I look at the level that I've drawn, what I can do is I can scroll over it and I can zoom in. And what I can do is I can look at these price levels that have appeared on my chart. Now, the way that I set up my fib levels is I set them up so that you can see that these are red and these are green. I do that on purpose because it's differentiating between the retracement zones, which are resistance, and the extension zones, which are the full target. Okay. So, the red levels are telling you, hey, you know what? There's probably going to be a pause here because this is a major resistance zone. And if we can get through it, then we are going onwards and upwards to the next zone and the next level, which is our next target. Now, once you get through these resistance zones, this is what we like to call the blue sky territory, okay? This is the overhead price target. That would mean that you're breaking through every zone of resistance, including the previous all-time high, and you're making your way onwards and upwards to a new level, which is absolutely amazing, right? So when we're looking at this chart, what I can tell you is that there are resistance zones that are pretty clear here. And I also like to overlap my resistance zones with key psychological values. So it's interesting how it's doing that naturally, but I would have, combined that anyway. So you can see how there's a level at 125.49, 136.94, 151.55, pretty close to key psychological values, right? 125, 135, 150. Then we have our overhead target at 170 and our next one at $193.70, which is pretty dang close to 200. Now, you might be looking at this and thinking, man, she is crazy. This thing is never going to $200 a share. When is that going to happen? Well, the way that Fibonacci works is, as I mentioned, you have to trade it up into the areas of resistance and you watch, it might pause here for a couple months. We might see some back and forth trading before it breaks out into the next zone. Obviously we can have pullbacks in the context of the trend, but when you're looking at a monthly chart, this is the big picture view. Now, if you go to your options chain, you can see and you can kind of gauge, all right, what are the market makers pricing in for this stock? In a realistic world, how far could this thing move in the next 6 months, let's say? Or conversely, you can say, all right, well, Google's right around 125. So let's see, when would it be reasonable that we could break these zones and end up back at the previous all-time high? Because that's what everyone cares about, right? Previous all-time high. So, $20, $25, $30 move. So what you're going to do is you're just going to come to your options chain and you're going to say, all right, well, a $30 move on Google, what does that look like? Let me see. So the market makers are pricing in a, $25 to $30 move in this stock all the way. So if we go all the way down to here, that would be January to March, January, March, June of next year. Okay. So in a reasonable world, that's kind of what you're looking for. Now, if you actually go down and you go down to a lower time frame chart, because you tell me like, Danielle, that is, I don't want to put on a trade that's going to be lasting all the way until next January. How can you give me a shorter dated price target using some Fibonacci levels? Well, then what you're going to do is you're going to go down to a lower time frame chart. Now, I like to point out that I use the monthly and I use the weekly and I use the daily charts pretty frequently as far as my investing is concerned, because obviously when you're buying and holding stocks long term, you do want to have that big picture view. But when you're trading, you want to have a shorter term idea in mind of where a stock could go so that you can place some trades. So when you're looking at Google, here's a weekly chart. You can see that same level. You can see it a lot more clearly when you're looking at that weekly chart. Let's go down to a daily chart and see what we can see there. And so when you're looking at this daily chart, that's when you can really start to see where that resistance comes in. So you can see how, there's a critical resistance zone right here at 125. And that also overlaps with all of this price action here. You have another resistance zone, say 136 to 140, that overlaps with all of this price action here. So when you're trading on a shorter term time frame, you can still use those levels, but you can also draw new levels on lower time frame charts. So if you are trading Google, which I am, just got into another Google trade today myself as well, that is going to be, still a useful level that you can use. Now, I got into a recent trade on Google due to this lower time frame squeeze right here. You can go all the way down to, for example, a 15-minute chart. And you can say, hey, you know what? I want to look at this ticker into the end of the day today. In that instance, what you would do is you would just maximize this grid right here. And you would say, all right, well, where is my previous swing? I need to look for the previous swing high and the previous swing low so I can grab the high and grab the low and therefore project resistance targets and full extension targets from that swing. So what you would do is you would say, okay, well, here's a swing, here's a swing. We've pulled back right here. As you can see, nice pullback there. So what you would want to do is you would pick the high and the low from this swing to project a level on this 15-minute chart for you to identify some resistance zones and full extension targets. So again, you can, click on you don't already have it selected. I already have it selected. So I'm just going to click right here and I'm going to drag right here. And there we go. So we now have a lower time frame price target on Google on this 15-minute chart. And what this is demonstrating is that we have a lot of, resistance between 122 up to 123.76. And then you have a full target at 124.26 and 124.90. Now, you might be asking, what kind of levels are you using on this tool? My tool doesn't look like that. It's not the same colors. How did you make it look like that? Well, what you want to do is you want to right click on your tool. It doesn't matter if it doesn't look exactly this way. Just, draw a line on your chart anywhere. You just need the drawings up on the chart so that you can edit it. So what you want to do is you want to right click on the tool and you want to click on edit properties. Okay, now this is going to come up, and what it's going to do is it's going to allow you to select which kind of values you want to look at. So in my case, when I'm using Fibonacci analysis, I'm typically going to use the 0.5 or the 50% retracement. What that means is that, let's say the stock goes up and it comes down. If it goes back up halfway, which, by the way, is very, very normal for it to retrace 50% of the way, okay? that is the level that I want on my charts. It's a pretty easy target zone. Even in a weak swing that falls, it's usually going to bounce at least 50%. So that's why I like to use that as a target. So I do want that one checked. The next one is going to be the 618, which is a very critical zone of resistance. The 618, I used to joke, I should get a tattoo of the 618 so I don't forget, because almost always that's where you're going to see a chart finding resistance, and I don't have any tattoos. And that's why it's kind of a ridiculous joke, because if I was going to get anything, I would want to remind myself, when you're long and you're hitting a 618 retracement level, it's very typical, very normal. You're usually going to see a pullback at that zone. So, don't panic. So 618 is after that. Then we have the 786, and then we have the 100%, which is just when you come all the way back up and you're right at that previous level. Okay. So these I have colored red because they're resistance. And then after that, these are green because cash money. That's why I selected those colors. So anyways, I'm personally not a day trader. I don't usually trade a lot of 15-minute charts, but if you want to, you can, and you just have to use a little bit more precise levels. Now, for me, I usually like to use swing charts. I call them my swing charts, which are going to be my daily and my 195-minute chart. So what I'm looking at here for Google is the fact that, we've had a really strong uptrend. We pulled back, we hit this zone of support, and it's starting to shift higher. Admittedly, everything's very extended, but if it's going to keep going in the direction of the trend, how can I identify where my resistance zones and my target zones are so that I can be long in this trend? Well, I want to combine at this point, not just Fibonacci, but also a squeeze, because here at Simpler Trading, and what I like to do is I like to trade momentum, and using the squeeze to identify when you have consolidation that is ready to break out is my favorite way to do that. So I like to combine the squeeze with Fibonacci and a couple other things, but for now we'll just stick with that. So you can see that we have this oscillator. You have green, 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 white, then it turns to red, yellow. This is basically just when it's in the squeeze, when you have red and white together. And what you'll see is the price pull back before it ultimately takes off. So because I'm trading this squeeze, which is on the 195-minute chart, what I'm going to do is I'm going to draw my fib level on that chart. Okay. And those are the ones I'm going to use for this trade. So even though my longer term view on Google, bullish, love to see it up at all-time highs again. And then in a couple years up at, 195, 200 in the shorter term, like what can I do with it for next week? So in this instance, you can see that your previous high, which is where you want to draw the level from, is right here. And then your recent low is going to be right here. So there we have my level. And I always like to highlight it like that so that I can see, what am I looking at? If you highlight it and you zoom in, you can really see where those zones are. So when you're looking at this, you can see that I have quite a few areas of resistance. If I can't see the exact level, you just have to zoom a little bit more. So my resistance zones are between 125, really 125 and 126. These are what I would call the easy target zones. Because that's the 50% and then the 618 retracement level right there. So when I look at this and I say, okay, pretty reasonably speaking, if the squeeze fires long and Google trades higher, it will be relatively simple for me to target 125 to 126. Like you're trading at 122.47. So, it's pretty likely at this point. Now, obviously, if, for example, this squeeze fires to the downside and the market rolls over and dies, then that's not going to happen. That's why you always have to protect your risk and control yourself when you're trading. But looking at this with bullish upside analysis, this is what I'm seeing. This would be the easy target zone. And then the full target would be making a new high right here on this chart. And then that would overlap with the 1272 extension. It's pretty close. You got that key psychological value, and then you have that extension target right there. So what I like to do is I like to use those, and then I like to also overlap that with a trade. So again, you come down to your options chain and you say, okay, where could this thing end up next week? Now, reasonably speaking, when you're trading at 122.50, that easy target zone is going to be much easier to hit. Okay. So you can see that the market makers are pricing in an expected move of about $4. So 122 plus 4, I mean, it's not really going to bring you up to 130. That's why going for that full extension is a bit of a stretch. And so when you come down to your options chain, you can say, all right, well, let's say that we're just going for a normal move. I just want to trade it into 125. You can see that there is a lot of open interest here at 125. Okay. So whenever you're trying to overlap a Fibonacci price target with a key psychological value and a monthly options expiration, it is very smart to also use high open interest. And you can see that there's 36,000 open contracts here. So typically what will happen on a monthly expiration series is we're going to see a lot of stickiness around those strikes. And we often see price trade up into that. Now, as you can see, I did just also put on a fly with the full extension target, which is 123. My butterfly is 123, 130, 137. So, that's kind of in the instance that we have kind of an explosive move in Google because of the squeeze, and it moves larger than the expected move. What you can do if you want to be a little bit more reasonable is you can say, all right, you know what? I don't think it's going to be all the way up there at 130. Not going to happen. But let me just try to trade it to 125. And so at that point, you can put on a butterfly. This is not a butterfly lesson. I will be doing more lessons on butterflies. But what you can do is you can say, all right, 122.50, let me do 125, and then let me do 127.50. Okay, now in this instance, this butterfly is a small account trade because it's only costing 49 cents. And you have about a 1 to 4 risk reward scenario here. So, you're risking $50 to make a max of 200. Now, when you're looking at butterflies, I usually like to get at least 1 to 3 risk reward, ideally 1 to 4, because that's how you can maximize your risk. And especially if you have a small account, I've always worked on building up small accounts. Butterflies to me are going to be the best way to do that because, well, you're risking 1 to make 4. So that is what I do. That's how I use the Fibonacci levels. I can go ahead and show you a couple other examples. But essentially, using Fibonacci levels is, I don't even know. I don't know how I would trade without it. So I would like to thank Carolyn Borodin, who is amazing, and the Fibonacci Queen, who is the one who taught me this work. So if you want to learn more, you can also go on Amazon and get her book because she's the best. So let's look at a couple different things on Microsoft. So if you're looking at Microsoft on a monthly chart, this is again just a very, very bullish chart. By throwing a fib level on here, you can see that we have a price target up at 400 and then up at 450. Obviously, you have these resistance zones right here. We've been able to get through 300, 330, and our next zone that we're targeting is going to be 350. But ultimately, I'm looking at upwards into 400. Microsoft is one of my top stock holdings, and using that higher time frame chart is what I'm using for those. Now, when you look at Microsoft on a shorter time frame chart, you can keep the higher levels in mind, but you're also going to want to look at, all right, where could this be into next week? So looking at next week, I can already see something exciting because on the 195-minute chart, I have a squeeze that's consolidating. Anytime you have a chart like this pull back and start to squeeze, that's amazing because it's setting up for a move. So to try to look at a next week time frame, you're going to pick your high and your low, and there you have it. You have price targets. Really, I like to, overlap where I have price resistance. So you can see that there was a lot of trade right around this zone. So 335 to 340. In this market in particular, I have really been focused on using the easy target zones instead of the full target. But I will tell you that now that the VIX is so low, I'm getting more back into using the full targets. These are kind of like the conservative zones, and then these are the full extension zones. So looking at this in Microsoft, 340. 335, 340 looks like a pretty decent price target. Again, you would want to overlap that with the expected move, keeping in mind that when there's a squeeze, you're going to see a larger than expected move. If you have a squeeze or if you have a short squeeze, the move will be bigger than expected. That's why we look for those. So Microsoft has an $8.69 move. So 335 is reasonable. 340 is a little bit of a stretch, but 335 is reasonable. Now, I know everybody wants to look at Tesla because, of course, Tesla is absolutely amazing, right? Now, I can get into a little bit more complicated Fibonacci analysis on this chart, which we are actually next week going to get into symmetry. But when you're looking at Tesla on a monthly chart, what I can show you is that we have perfect symmetry, which is something I absolutely love. And symmetry is when you have two swings that are symmetrical, like they're pretty close to being the same, okay? So for example, you had this big down move in Tesla, and then you had a rally, and then you had a big down move again. Now, when you use symmetry, which again, we're gonna do next Friday, what you're doing is you're measuring this swing and you're projecting it from here to see if this down move was the same as this move. Now, in this case, it was, and that's the exact point where it bounced and it started trading higher. Now, in Fibonacci, this is going to be called a two-step pattern, very bullish, by the way. And we also have a very bullish monthly squeeze. In this instance, you have momentum that's shifting. You can see it's going from red to yellow. You also have volume that's really coming through and breaking out. You have breaks over these previous areas of resistance. And when you have a chart like this that is not as clean, you can do a couple different levels. So let me just go ahead and erase that. What you can do is you can say, all right, I want to project a target from the most recent swing. Or you can say, I want to also project a target from this huge swing too. The huge swing is going to give you the longer term target. This one is going to be a shorter term target. Now, again, if you're not sure, okay, well, what's the time frame look like for that? You go to your options chain. So in a shorter, term way of things, we're looking at 268 as resistance and then 300 to 315 on that monthly chart, okay? Now, you can see right here that you're trading through a critical resistance zone. This is like one of my favorite things to see, because when you break through resistance, that's when you keep going in the direction of the trend, right? Now, Tesla is also pretty unique because what we have with Tesla is we have also potential short squeeze. So if you look at this daily chart now, and sometimes when you're drawing levels on the higher time frame charts, you don't get the exact low. So what you do is you're just going to right click on it and you're going to click on activate drawing, and you're just going to move it to the exact low right there. Okay. Oh, and I got to get the exact high too. Activate drawing right here. There we go. Okay. Then you click and it'll set it. All right. So what we can see on this chart is that when Tesla broke through this major 618, it had, big breakouts up 5%. That's very typical that we see, number one, a pause around a 618 zone. But when we see a breakout, it's even better because at that point, your next target is overhead. If you're looking at this chart and you're looking at just a shorter term price target, what I can tell you from Fibonacci is that this chart is extended in every way. What that means is that it's made the majority of the price targets, if not all of them. So if you're looking at this most recent swing, which is what I would do to look at this on a shorter time frame daily chart, I would use this zone and this zone personally because that's the most recent swing. And so when you click here and click down to here, what you can see is that you have in this chart broken through this zone, this zone, this zone, which is very bullish. And you have made your 127 full extension. And then after that, not only did you make that, you made the 2618, which is all the way up here. Okay. So what that means is that if you are long for a trade on a shorter term basis, you should be taking profits. Okay. Normally, what you're going to do when you're trading something like this is you scale. Now, we haven't seen this kind of extension. We haven't really seen this kind of thing for a while, but we're getting back into just like a regular bull market at this point, to be honest. VIX is like below 14. And so with the way that we've been trading over the last year and a half, we've really been focusing on these targets here. But I think we're getting back to the higher time frame targets now, which is great because that means bigger moves. So when you're looking at this chart, what I would normally do is I would scale out. I would take some profits here. I would take some profits here, and I would leave a runner on in case you do get that very last extension target, which is up here at $300 a share. But you do want to be protecting yourself, taking profits, that kind of thing. Now, I am a Tesla shareholder. Tesla is now, with this move, the largest holding that I have in my long-term stock account, and there's no way I'm selling it. So let's see if I can answer some questions. So this is only my second time doing a stream like this, so I'm going to have to figure out where I can actually see the questions. What if the squeeze fires short? So anytime you're trading a squeeze, what you really want to do is you want to look at it in the direction of the trend. And the majority of the time, we say, 70% of the time. I always hate to put an exact percentage on it because the market conditions change. When you're in a really strong uptrend like this, it's more likely that the stock will continue going in the direction of the trend. But when you're in a more volatile market, then those percentages are lower because you're going to have, upwards and downwards trades. So in this kind of market, normally it goes in the direction of the trend. Now, if the squeeze fires the wrong way, if you're trading something and you thought you were targeting 130 and then all of a sudden it's breaking down, that means that didn't work. You're wrong. And you should have your stop level in place. Typically in a swing, what you want to do is you want to have your stop below that low that you drew on your chart. So, for Google, for example, you can look at these lows and you can use a tight stop, 122. That's pretty tight though. I would use rather like a 121 stop because what that would mean is you broke below these lows and let's say the squeeze fires short, you're wrong, you got to get out. Now with Tesla, what is the high short float percentage? I need to check on that. We get that data from S3 Partners, and I looked for it yesterday and I couldn't find it, but I will try and get back to you on that if I can locate that data. But Tesla, and Tesla's always been heavily shorted. So whenever you have a stock that comes through these previous zones like this, it's usually going to, take off. So you can see that happening because you can see this resistance zone right here, and then you see what happened when it broke through it. So I can tell you what it looks like on a chart when I can see a short squeeze, and that is it. When you broke through that zone, I mean, you get this major gap. So now anyways, I'm just going to draw just a few other levels so I can show you. And then after that, that will be the end of our session together. But I did want to point out AMD as well. So AMD has a nice 195-minute squeeze. And if you look at the lower time frame chart, I'm just going to go ahead and remove this so I can draw it for you. Again, you're going to look at your swing. You can see how you're in a nice uptrend. It pulls back. This is when you want to be entering your position and you're trying to identify where it's going. So you're going to click right here, and you have resistance zones that are right in this area. You can see we've already hit the 50% and broken through it. And now we have the 618, which is next. You can see how it's pausing right there. So you have resistance at 125. You have your next resistance target at 130. And after that, you have a target at 135. So there are some upside targets in AMD. And then next, NVIDIA is also another one that just continues to go onwards and upwards. So if you wanted to project the next price targets on this one, you're going to click your previous high, and then you're going to pick your most recent low, and you are going to zoom in. And what this is going to do is it is going to identify a resistance zone at 400. You have two more levels, 410 and 420, before you get to blue sky territory, which is between 430 and 447. So that is all that I have for you today. I am going to be doing more sessions throughout the summer. So you can send me a tweet on Twitter at Trader Danielle, or you can send me a message here in the chat room. I'm not really sure how I can see all of the questions, but if I didn't see your question, I'm sorry. And I hope you have a great rest of your day. I will look forward to streaming next Friday, and I'll see you next time.